Welcome back. Let's get into the market news now. Asian markets rose this morning. Now, while the Mexican peso rallied more than 2% after Donald Trump dropped threatened tariffs against Mexico, while weak U.S. jobs data from last week fanned expectations that the Federal Reserve in the United States will cut interest rates next month. We'll only see if that happens. Speculation about a cut in borrowing costs saw the dollar then retreat against most high-yielding currencies, though the pound does remain subdued owing to Brexit uncertainty. Tokyo's Nikkei then managed to move up today, firmly above the 21,000 point mark, sitting 1.2% higher, while the Hang Seng was the biggest gainer today, sitting at 27,578 points. That's 2.3% to the good, and a good day as well for the Shanghai Composite, 0.9% higher, 2,852 points. Over onto Wall Street now, where major indices charged higher last week Friday as sharply slowing U.S. growth data boosted hopes for Federal Reserve interest rate cuts, while optimism about potential progress in U.S. trade fights with Canada and then China and Mexico, should I say, added to risk appetites. Now, the Dow Jones Industrial picked up over 1%, 25,983. The S&P 500 also gained a similar mark, and the Nasdaq moved up 1.7 points, 7,742 points. Let's move on to the market picture across the world now, and particularly here in South Africa. And of course, Europe is beginning to trade as well today. But very quickly checking in on that, the DAX out in Germany is the only one major sort of market that is down a touch on that front. Some news, however, coming through for the likes of the CAC 40 in France and the FTSE 100 in London of some better sentiment coming through on that front there too. But locally, all green for now. It is a much better day. Of course, the sentiment filtering through from the likes of the Hong Kong markets, 2.9% higher for Tencent out in Hong Kong, which does mean that the likes of Naspers, of course, doing a little bit higher, or faring a little bit better as well. BHP Billiton having a great day out in Australia early this morning, which meant that that stock should have had a much better day on the local front as well. But the resources overall, however, not doing as well as one would have hoped. 46,314 points there, going down, unfortunately, today. Checking in on the rest of the market as well, then you'll see that the commodities, however, still faring quite negatively. Look, that oil price may be going down, but it is only, it is higher still from where it was last week. Of course, we are seeing that supply constraints may continue in the market. That's according to Saudi Arabia, who says that OPEC Plus, which of course includes the likes of Russia, may continue to hold back when it comes to supply. And that does mean that demand continues to rise. And of course, that pushes that price a little higher, $63.23 a barrel. Quick look at your currency picture there. Of course, the rand having traded at around 15 rand against that US dollar last week on the basis of the mandate expansion for the South African Reserve Bank, which will continue to be in question, has rattled the markets and put a spin with regards to investors, has now shifted the market a little bit lower. So you're doing a little bit better off, 14 rand 89 against that US dollar, 18.88, having touched that 19 rand against the British pound figure as well, and it is at least a little bit better off. That's a look at how the markets are currently faring. Let's quickly chat then to Gary Boyson, who's live at the Johannesburg Stock Exchange for us from Rand Swiss as we get into that market picture. 0.5% better off there, Gary. Yeah, it must be a better sentiment coming through from that Asian market, right?
Absolutely. Asian markets certainly helping to lift us, as you mentioned, Tencent a little bit higher, but this really feeding through from the US gains as well, partly because of the weaker jobs numbers, which has resulted in that expectation that we will get lower interest rates, and that's certainly fueling some equity market buying. But at the same time, the idea to halt the introduction of a 5% tariff on Mexico by the US, I think that's certainly settled market nerves. I think that really was front and center, and with a little bit of risk on trade creeping back into the market, you're seeing the safe haven assets fall, but you're seeing the equity markets rally, and we're certainly benefiting from that today.
Yeah, one would have then said that if we had the Mexico issue and we continue to have that weak jobs data, and the United States then hopefully does decide to then cut those interest rates, that the South African currency would then be benefiting from the news. But we certainly continue to score these own goals for ourselves, don't we? Even reaching 15 rand against the US dollar for the rand at some stage.
Because the rand is significantly firmer today, and when I say firmer, it means that we're just below 15 rand to the dollar. Partly this was international factors. We have seen that risk-off sentiment, impacting all emerging market currencies, although there is no question that the rand was, severely impacted by local factors as well, because we were outpacing the losses of the other emerging market currencies. But if you have a look at it, certainly the own goals you're talking about is, I suppose, the discussion around the Reserve Bank mandate and whether we can potentially expand that to include growth. But even just the debate weakens financial markets. It certainly it creates uncertainty. Financial markets dislike uncertainty, and we've seen the rand weakening on the back of that today, with a slightly more positive sentiment internationally, and I think a little bit of nerves settling domestically as well, after we've had the likes of Lesotho Kganyago and Tito Mboweni coming out and defending the Reserve Bank's mandate. I think we're seeing a little bit of a return to normality, because if you look at the local currency, if you do, there's a number of different calculations you can do. You can look at purchasing power parity. People might understand that as the Big Mac index. It definitely looks like we're overdone at 15 rand to the dollar. There's a significant risk premium for holding South African currency, but we still pay a very good interest rate, and from a systemic point of view, I think potentially the fears are overdone. So to see a little bit of a strengthening in the rand in the days and weeks to come, I think is probably likely.
Yeah. Well, if that's good news, is China's export data then that's going up more than expected? Does that bode well for the market? Of course, yes, rare earth metal exports, that declined, and as well, imports in general overall for China's economy also not coming in at the level they would have liked. So weak demand still on that front, but their exports still doing fairly well.
Yeah, I think it was really the export number that everyone is focused on. They wanted to see how much the current tariff regime had impacted China's ability to export. So with the large surprise in this number compared to consensus, it just leads us to believe that China is managing to still export, even though it is now potentially exporting to other nations, not necessarily directly to the US. Yeah. We've already seen the final phase of production of many Chinese goods being moved to the likes of Vietnam. Vietnamese exports then obviously boosted, but China managing to export a number of partially finished products into Vietnam, who will then re-export to countries like the US. So the fact that China is still managing to export and to an extent circumvent the tariffs that have been put in place so far, I think is encouraging for markets, because if we do see a total contraction of global trade, we know that will result in very recessionary conditions, and I think this is certainly, it's a positive number, and I think it's part of the reason that we're seeing a kick up in global risk appetite and certainly equity markets across the globe.
Yeah. Let's bring it back home a little bit. We just got a report out from Moody's, of course, signifying just how important that drop in that GDP number is to South Africa's economy, and it is credit negative. That does mean that they could perhaps downgrade South Africa, whether it be just with regards to the outlook, which currently sits at stable, or the entire credit rating itself, of course, which is one level above that junk status. Where does that put us then? At what state does that set South Africa? Should we even be caring at this point, or should we just be looking to fix house and we'll sort out the rest later?
Certainly, it's very difficult to focus on on fixing a number like GDP. What you're saying about cleaning house, that is required, and the GDP number will follow on the back of that. It's like saying, let's target unemployment. We know we want to target unemployment, but the way that we do that is make sensible policies and implement programs that are going to achieve this outcome. But if you have a look at that Moody's announcement, certainly, I mean, credit negative, that GDP number was very, very bad. And the constrained, I suppose, growth of the South African economy is a real worry for ratings agencies. If we look at whether Moody's is going to downgrade or not, Moody's has been incredibly generous with South Africa up until this point. If you look at what we call the credit default swaps, it's essentially the cost of insuring a country's debt. We are at about the same price as somewhere like Brazil, which, if you look at the Brazilian credit ratings, are significantly lower than South Africa, certainly not investment grade. So if you have a look at something like that, the markets are pointing to the fact that South Africa should be, stripped of its investment grade credit rating. And Moody's, as I said, Moody's has been very generous, giving us time to clean house and giving us time to get our affairs in order. I think we should use that time wisely, certainly.
Yeah, hopefully we do use our time wisely, because it seems like a matter of when and not necessarily if we get that ratings downgrade from Moody's. Gary, appreciate the time there, but Gary Boyson from Rand Swiss, they're helping us unpack that market movement live at the Johannesburg Stock Exchange.